Hey everyone, hope you're having a good day. My name is Finding Value. Today we're going to rip through Twitter, see what people are sharing on social media. It's generally related to three different topics: wealth building, commodities, and/or financial topics. So we're going to dive right in. We're going to take a look and see what people are sharing, and I'll share my opinion as we go through it. If you want to follow me, it's at @Finance, and if you want to join our community, finding-value.com. We're pretty chill. We've got midweek updates, question and answer sessions on the weekend where you can interact with me and maybe even other members. We've got a Discord channel where we talk about investments, and there are also a lot of topics that are outside of investing in some of the other channels that we've got in there, sub forums or whatever you want to call it. We have a coupon code Mayday that is active that you can join and try it out if you'd like. 50% off the first month. It costs 25 bucks for the first month to try it out. And if you don't like it, that's okay. No harm, no foul. If you do like it and you get a lot of value out of it, which I think a lot of people will, those that are wanting to learn to invest, learn how to invest, I'll teach you how to fish. I'll teach you how to invest. And you can see my entry points. You can see everything. I'm pretty much an open book. I'm completely honest. I will not try to steal or do anything to take from anyone. I don't need to. So try it out. See if you like it. See if you like the community on Discord and everything else. And yeah, that's all I'll say there. So we've got Sam. Sam says coal stocks are the Trump trade that nobody is talking about. And look at that inverted shoulder head shoulder. It's a massive one. And you know who's already in it? People on the website are. A lot of the companies have already broken to the upside. This head that we've got here is breaking already for a variety of American coal companies. There are also coal companies in Australia that look pretty good, and even in other countries that look very good. Some of these coal companies pay very big dividend yields. They're buying back shares. They got the recipe for success. So would I play the coal trade? Oh, yes. And I hate to admit it, guys, but I was wrong on coal in 2020. I had the opportunity to buy at least one of the stocks that I charted for someone at the bottom here. And it was an inverted shoulder head shoulder for that particular company right at the right hand side in late 2020, around October, November of 2020. It went up dramatically from that price. I missed that one opportunity. I know insiders at some of the electrical utility companies, and they're swapping all their coal for natural gas. So what I did is I loaded up in the natural gas companies. So I was wrong in 2020, not buying that bottom with the company. And now I'm very pro coal. I understand the thesis. I see it, and I loaded up on some coal stocks down at this bottom here with some really good dividend yields. I am really bullish on demand for coal, especially in India and China and overseas. Very, very bullish. And with AI coming up, artificial intelligence and the electricity demand, I think natural gas and coal are going to light it up, baby. They're going to light it up. So this is a really good chart. They're pretty reliable in terms of this big pattern. It's a very big pattern here, guys. The bigger the pattern, the bigger the move. So the projected move higher is this head from the resistance area of all these arrows, the bottom here, and then it's projected upward. So it's probably going to go all the way to its highs, would be my guess. All the way back to 7,000, 6,000, wherever that high is. And we're at 554. Think about that for a second. Think about that for a second. Finding value myself, it says, now that Trump is president, let's just quote Rothschilds. Let us control the money of a country, and we care not who makes its laws. Think about that one. Because the people who control the issuance of the money controls the government. Does not care who makes its laws. So is Trump going to be the big deal? Is he going to be our savior? No. Yes, some things may get better, depending on how you're measuring things. Some things will be better. Some things could be worse. I would like to think that a lot will be better, but will he be enough to change the trajectory of America? My guess is no. And this quote is the reason he cannot, is because these people control the money supply. So if it says, let us control the money of a country and we care not who makes its laws. In order to fight that, you must disrupt who controls the issuance of money. And that's where my view is. XLE, close to a big breakout after years of consolidation. He is exactly right. Let's look up the chart here. So XLE is the Select Energy Fund. We are up quite a bit today in that fund. We are right at the support resistance area. There it is up here. You've got stronger support down here where it's low because that's where your turning points are all located. You've got one up here. But if you notice, we've been coming on up. We had like this false breakout pullback within, and now we're breaking back out again in XLE to the upside. So is this a break in the energy sector? I don't know yet. We need more follow through. And if we get the follow through, then ayo, like it's ready to go, baby. It's game on if we get out of here. But it's looking real good. It's looking a lot more positive. We got Big Oren here. He says terrible crude exports numbers this week. Exports are now below 2022 and 2023 levels. This is the factor that Trump has to face, that refineries outside of the US can't absorb more light sweet crude. Drill baby drill will not work in this environment, and inventories will just fill of this oil that nobody can deal with. We can't even refine the oil that we make here. We have heavier crude refineries than what we can absorb with the super light sweet crude that we're getting out of shale oil. So that is a problem. We are producing a lot of oils that the refineries don't know what to do with. So that is a potential problem. Trump and energy. So this is his opinion. Natural gas is bullish, and I agree with this. Every LNG export facility gets a green light. Power gen expansion gets tilted massively towards natural gas and supports international LNG buildout. Coal is moderately bullish. Coal power gen get longer life. A push for reshoring could support met demand. And then oil is neutral to bullish. Biggest impact would be to what degree he enforces Iran's sanctions again. So that's that person's opinion on what potentially could be a positive or negative outcome, depending on how you're looking at it from a Trump presidency. Peter Schiff, the best Trump trade now is buying the dip in gold and gold mining stocks. Cutting taxes is easy. We know from experience that substantive spending cuts are impossible. Even Reagan couldn't do it. Despite making greater promises to do so, Trump will make inflation great again. And I agree with him. A lot of things that Trump does and what he says, he measures himself by how high the stock market goes. I know he's compared, Biden and other presidencies to the stock market gains. In order to get big stock market gains, you print a lot of money. That's what pushes it higher. If he wants lower rates, he needs QE. If he wants QE, that means more money printing. If they go that route. So make inflation great again, potentially. Could be. Jay Mackey says, contrarian takes. China earnings are going to be much higher under Trump than Biden. Oil won't be in the 60s. It will be range bound in the 70s and 80s. No amount of Elon government efficiency can help Trump's giant tax cuts. Rates down, printing up, DXY doesn't fly. DXY would go down under that scenario. 100% correct if they do the rates down, printing up, DXY is going to just fall on its face. What's going to do well on that? Commodities. Oil is going to go up into declining DXY, so will gold. When the dollar goes down, emerging markets will fly, and also commodities because of the weaker dollar. The EIA inventory moves, we did get a build, and keep in mind we are in building season. Crude up about 2.1 million, gasoline's up a little bit, 400,000, and distillates up about 3 million. HFI research for oil, Trump is net bullish. Watch for sanction enforcement in early 2025. Iranian floating storage building will be the leading signal. So we're going to look at Iranian storage building. And right now, these have been coming down, which means they're shipping their stuff. Post-election market thoughts from Warren Pye. It says yields up is a continuation of the growth scare unwind, not a Fed losing control or a policy mistake, or concerns over a new wave of tariff inflation. The question going forward, can the U.S. economy operate with a 7% mortgage rate or greater? I don't know. We'll find out because that's kind of where we're at. Brandon says metals and mining ETF XME is breaking out into new 2-year highs. Probably nothing, and they usually say that if they want to be cool. What I see is a double bottom, 16 and 2020. That's your double bottom. You draw a line across through here, and then you broke out of that, and now we're entering a stage 2 move higher. That's where we're at for XME. How on earth is Fed going to cut the rates tomorrow? So the Fed has their meeting. I guess it's going to be today if you guys are listening to this. And look at the launch pad here of interest rates. And they said, how on earth is the Fed going to cut rates tomorrow with this going on today? I don't know. Don't know. Grady says silver's down 4.5%, but SILJ is down only 2%. Seeing the same thing all over again. The underlying bullishness. The Fed FOMC rate cut decision is tomorrow, which is today, and we'll see what happens. This is going to be a lot of volatility here around this election here that we're getting. Feels like a buy the dip moment in the precious metals and industrial metals. Will delete if I'm wrong, obviously. It does feel like buy the dip. That's how I felt too. I saw gold and silver go down and platinum and palladium, and I was like, should I buy some more physical metals here? Looks good. There's also some mining companies that are down right at support, and those look pretty good too. So a lot of juicy opportunities out there for those that are looking. A4 Alpha, TMF, this election results demonstrates that democracy works and legacy media may not. Expect a strong market and higher inflation. This will benefit banks, energy, and commodity companies. I agree with all of that. Commodities, energy, and banks go up during expansionary phases of real estate too. So I think we should see the home builders start to go up if they continue to lower interest rates. And what I mean by continue, I mean that interest rates actually go lower, not they lower the short end of the curve and then the long end blows up. I mean actual declines. Now, Gary Savage, he wrote this, and I want to go over it real quick. He said, there is a lesson here if people are willing to learn. You absolutely have to be willing to change your mind and reverse 180 degrees in the blink of an eye if the market tells you that your expectations are not going to happen. I was looking for a ballistic phase in silver. However, it needed to happen ahead of the election, not after. That was the first red flag. Then other red flags started to pop up, telling me I was not going to get the ballistic phase I was looking for. I went over all these warning signals in the premium report and suggested members should consider just being happy with their gains as the ballistic phase was becoming more and more in jeopardy. In this business, you can't have an ego that prevents you from acknowledging the market is not going to give you what you expect. We get in with leverage on September 10. I advise members to be satisfied with gains and probably give up the ballistic phase on October 30. We locked in profits of 60 to 100% or more on this trade. Yes, it would have been wonderful if we could produce 200% profits. But if the market isn't going to give you the 60 to 100, then don't argue with the market and be happy with what you get. Now we wait for the intermediate correction low to run its course. Once it has, we will enter leverage again for the next run, and the trolls will be convinced gold can only go down, which is the bell ringing that it will be time to buy. This isn't over. Gold will go above 3,000 next year. In the meantime, there are other sectors to trade while we wait. Um, I don't trade this stuff, guys, and I can't imagine trying to go back and forth and trade this in the very short term with leverage too. That's pretty ballistic. But what I can say is this: when I go and I just type in silver here, and I look at a big long term silver chart, right? And we see this little squiggle on the right hand side here. I look at this and I go, well, this is just bullish. It's going to go up. So what do? I buy the dips, I hold the rips. It's that simple. And I think we're going to go way higher in silver, gold, crude oil, whatever. Doesn't matter. They're all going up. And it's due to what this is being priced in, which is the USD. The USD on that scale there, that's what's going to decline. And this is all going to go up because of the dollar declining. So I don't trade this stuff in the short term. I think you lose the forest by focusing on each little petal leaf on a singular tree. I look at the forest and say, this is a big pattern. We got big moves. The big money is sized up by sizing the big move and then being patient enough for the big move to occur. We can also look at this, and I'm just going to do this for the heck of it. A lot of things happen over and over. So this is a fractal of the 1970s. We had a consolidation in the middle of this fractal here. So that's the fractal. What you can do with these is you can expand and contract these fractals. So in my opinion, what we have here is that fractal is that move there. It's a hair different, and we had a little bit more of a pullback in this move lower. But I think we're going to end up somewhere, maybe not $800 where it's at. Maybe it is $800. I don't know. But it's going to end up on a big move upward. And I don't like paying taxes. I don't like getting other people rich and paying short-term capital gains tax. So I don't trade a lot of this stuff, especially if it's in a taxable account. I want to hold it for at least a year, reduce those taxes, and get me big dividends along the way, if we can get them, if there's opportunities. But that's what I think's happening with silver, and I've been real patient here. I purchased a whole bunch in this section here back when nobody was looking at it. I grabbed all sorts of stuff: American Eagles, Canadian Maple Leafs. We're talking specials at a buck 50 over spot. We're talking $14 per something ounce silver with $1.50 premium on American Eagles, and I'm going gangbusters. And now we're up at $31, and I think we're going to end way up here. The power of making money lies in the ability to buy it when it's cheap and the ability to hold on and be patient. The short-term gains and the short-term noise is just distractions to the big move. And the big move is where I'm going to make, hopefully, a lot of money. Not just in silver. I'm not 100% in silver. I'm scattered across a whole bunch of things. But that's just an example. Peter says, for all the hand wringing, the fake headlines, oil is dead, Texas tears, broke OPEC, the looted SPR, paper market meddling, the election is now over and Brent is 75 plus, global inventories are low, demand is healthy, maintenance wrapping up, and things looking very, very bright in Houston. It does look very good for oil. Silver, nothing's changed in the long term. I was just doing the long term chart. Rob says gold and silver dropping post election. However, world still de-dollarizing. Debt has not gone away, and the system liquidity is collapsing. We are not out of the woods yet. Be calm and continue to get out of debt. Spend less than you make. Accumulate metals to stabilize finances. I agree. I completely agree. I don't think anything's changed. Yeah, they changed one of the, a few people, and I think what is it? The House changed, I believe. It's now Republican. I have to look. Um, but I don't think anything's changed long term. I don't think they can steer the boat. This is like trying to steer the Titanic after it hit the iceberg. Like everyone's cheering, like, "Yay, we changed the captain." It's like, dude, there's a huge hole in the side of this boat here, buddy. Like that's not going to fix itself. It's still going down. We can rearrange the Titanic, deck chairs all we want, but it's not going to matter here. That's my view. Maybe it's wrong, but that's kind of how the way I view it. Trump nears victory. What does this mean for U.S. liquefied natural gas? Trump administration will quickly overturn the ban on new LNG export project approvals. Here's another thing to think about, guys. Those terminals are going to connect world pricing to America pricing. It is incredibly bullish for natural gas. So I think that what Trump could do is going to be incredibly bullish for natural gas prices to go up. It's actually going to become more expensive to heat your house. So let's take advantage of this, buy some natural gas assets, and take advantage of it because that's all you can do. All you can do. Bullish. So bullish trend says you won't see drill baby drill at $70 oil. You won't. They're not going to drill at a loss. Sorry, not going to happen. Drill baby, drill only works if oil prices are high enough where you can bring them down. You can't bring an oil price that's at the cost curves lower because they'd start losing money and go bankrupt. Breakwave says tankers remain the best geopolitical hedge against the new world order that Trump presidency might bring, in his opinion. At current prices, the optionality that tanker values provide on a potential escalation between Iran and US is much cheaper than any other core energy trade. Oil has to be transported, and any event that disrupts such a logistical chain, especially due to conflict, would lead to a scramble for securing tanker vessels at much higher prices from a very low level. There are numerous scenarios on what might happen, but the risk reward remains superb versus other similar tradable assets such as oil. I actually agree with this statement here, and I am taking full advantage of it because there are opportunities in the tanker space that are cheap and I think could potentially pay 15 to 25% dividend yields, not this year, but next year on the shares that you buy today, if that makes sense to you guys. So if you buy shares today, you could get a 20 to 25% return on the shares that you purchase and the valuation that you purchase today. So if I put 10,000 in today, I could get a $2,500 dividend yield per year next year or the year after. So I'm buying the cheap, out of favor play with the risk reward that this setup has and reap the rewards over the coming years. That's the way that I'm viewing it. And if you guys want to know those companies and my favorites, obviously they're all on the website. And one of them is in my Roth 401k that I've been buying up. Eric Nuttall says, I believe the oil market is getting a Trump victory wrong. Drill baby drill is 100% toothless. I believe that with the shale CEOs who tell me this. Don't believe me? Question mark. Just look at Chevron guiding for a Permian plateau on their quarter 3 conference call. What is being forgotten? Iran. Under Biden, Iranian exports surged 1.8 million barrels per day. I expect Trump to enforce existing sanctions hard, dropping Iranian exports by a million barrels per day. Yes, Saudi and the UAE will step up to fill the void in time, but this will be the beginning of normalizing OPEC spare capacity, which is oil bullish. So what he's saying is if they sanction Iran and they hold up that oil, we basically suck up the world's capacity almost completely. And then once that's sucked up, the Permian, if it's hitting a plateau that Chevron is guiding in their third quarter conference call, which is where the majority of growth in the world came from, well, where's the growth in oil going to come from next? Bullish. It's bullish, is what he's saying. Patrick Karam says the long-term trends do not care who the president of the United States is. Completely agree. Another one from Break Rave. He says alumina inventories in China have been steadily falling over the past few years. That recent disruption to bauxite exports from Guyana is likely to see further drawdowns in coming weeks. Down, down, down for inventories of aluminum, bauxite. Hollow Macro says, all I keep thinking is seriously, what the heck is Fed going to do? Good luck cutting into this with all growth inflation projections on fire. And if they don't cut, then going to be seen as political. They are screwed any way they go. Love it. Love it. Lithium is confirming a major cycle bottom. That's what's going on there. We've broken through all those downtrend lines and we are moving up. He's got a stage 2 breakout. You know who bought the bottom of this over here? This guy did. There's some setups and individual companies that looked really good back in September. And I shared that with everybody and we got in. Some of us got in at least, maybe not everybody, but anyone who wanted exposure to lithium got in. We're riding the train there. Someone says, or asked me to comment on this, says if Trump wins, oil is screwed for the next 4 years. Like Biden, he's also an old timer that thinks that gasoline has to be cheaper than water. He'll do whatever it takes to bring down oil prices again. Also, tariffs are not good for China, which sucks for oil. I think he will win. I disagree. I think the Permian is plateauing, and I think we could see declines as soon as 2025, 2026, which is possible there. Declines of oil, maybe not natural gas, but oil. And I also think that it's a lot more complicated than what most people think. Just because someone says drill, baby, drill, doesn't mean they have a strategy that will work at $70 per barrel price. I think we're going to go up. I think he's going to print a lot of money. And if the Permian cannot respond with barrels, it'll be inflation and higher oil prices. Inflation, higher oil prices. And that is part of the design of the system. The dollar has stopped confirming the rally in the 10-year yield. A similar divergence was present the last 3 times rates rolled over. And we had the dollar roll over and rates, I mean, they spiked today, dollar and rates. But we'll see if that holds. We'll see if that holds. And okay, so we've got Tavi here. He says, I'm astonished that the risk to the US dollar isn't getting more attention. We're seeing the steepest decline in pro-growth fiscal spending in 40 years, with the Fed that's compelled to cut rates despite clear signs of bottoming inflation. This is one of the most challenging environments for the USD that I have seen in my career. At this point, it's almost absurd to hear people call the US dollar the cleanest dirty shirt. Nothing could be further from the truth in my view. Name one major economy paying nearly 5% of its GDP in interest payments today. There isn't one. US federal and state local interest costs are eating into resources that could be used for productive fiscal policies. I'm well aware that almost everyone disagrees with me on this, but the Fed's urgency to lower interest rates is greater than that of any other major central bank in the world today, in his view. And pro-growth fiscal spending percentage way down here, lowest in 40 years. And that's where I'm going to end it, guys. That's where I'm going to end it. So give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you'd like. Mayday coupon code is still active. And that's all I've got. So catch you next time. This is Finding Value.